Hey, Crypto Growth fam, how's it going? This is your host Shazib signing in. We're back with another video, guys. In this video, we will be discussing Hedera and Ripple. The future is on chain. It's going to be an interesting one, guys, so make sure to watch till the end. And, folks, for those of you who are new to the channel, we primarily discuss utility coins and potential gems. If you're interested in any of that stuff, then subscribe the channel and hit the notification icon for regular videos. And you can also support the channel by becoming a Patreon, so do check that out as well only if you're interested. And folks, you can also check out the official crypto growth partners for the exchange. We've got MEXC. You can follow the link in the description box below for rebates, discounts, offers, benefits, and lowest fees. So do check it out. And as far as the wallet is concerned, you can check out Decent. They've got their remarkable products, their biometric wallet, which has got an astonishing $30 off. And you can also check out their biometric wallet 2x package, guys, which has got a phenomenal $99 off only if you follow the link in the description box below. Decent supports 3000 plus of your favorite coins and tokens, and it supports 50 plus blockchain mainnets, including Hedera and Ripple, so do check it out. Anyways, let's see what's happening with both of them in real time. Let's start with Ripple. Let's see if we've got anything new in their official handle and as well as the community. Let's find out. So look at this. This is Ripple 3 hours ago. Last week, $1.4 billion was lost in a security breach, folks. $1.4 billion. I mean, this is not a small amount whatsoever. Secure and compliant crypto security isn't nice to have, it is a necessity. Indeed, it is, folks. Without security, this industry won't go anywhere. Mass adoption cannot happen. These big institutions cannot rely on this industry, even if it provides the best use cases, if there is no concrete security involved, folks. So look at this. Learn how Ripple Custody provides institutional grade security built for trust and resilience. Let's check this out, folks. This article out. Look at this. This from official website of Ripple, institutional crypto and digital asset custody solution. Access the entire digital asset ecosystem today. Scale new revenue streams and deepen customer retention with secure crypto custody solutions. Look at this. Custody is the foundation of any digital assets business. It securely enables new use cases across tokenization, digital asset management, stablecoin issuance, and beyond. So multiple use cases, folks, but custody is obviously a foundation for all of this, be it real-world asset tokenization and all of these other sectors, segments. So look at this. Our self-custody technology offers this and more. A single platform for what? For safeguarding, managing, and engaging with digital assets. This solution is required for this industry to progress, folks. We need the highest level of security, and it is not it is a need of the hour, folks. Who's this? This is the lead solution design, digital custody, DZ Bank, Nils Christopite. So what does he have to say in regards to Ripple custody? Look at this. Our requirements around security, scalability, and future-proofness of our digital asset custody initiative were highly complex, and Ripple custody proved to be the only solution fit for purpose and able to support our target operating model. With the offering we can build by leveraging this technology, we can create long-lasting competitive advantage. So this is a use case, or this is something that Ripple has provided in real time, folks, in the real world. And this is how Nils is giving feedback to the utility of and services of Ripple. Basically, why is it most really secure, scalable, future-proof? Why finance industry leaders choose our institutional grade digital asset custody software. So in a nutshell, folks, look at this. It's security and execution, Balance bank grade security while maintaining 24/7 real-time execution. Advanced governance framework solve clients' operational challenges, offer new value-added services, and integrate custody as a core part of your tech stack. Number three, efficiency and automation. Ripple is known for its efficient, seamless, optimized services, and in this case as well, it is providing that build new back office efficiencies and automate or eliminate manual transaction processes. Flexible deployment enable flexible SaaS, customer hosted or hybrid deployment models coupled with your preferred key management system. Awesome. This is great, folks. Ripple custody, this is the dashboard, total balance, balance history. This is what the institutions want. This is what the organizations, the ones that are in the higher echelon, they want. A concrete security, because nobody can risk their funds, folks. And when we talk about these businesses, these huge brands, they cannot afford anything less than the highest level of security, folks. Explore what's possible with Ripple custody. Banks, expand your business model and meet both individual and institutional client demand. Neobanks and digital banks build new revenue streams and increase margins by adding crypto accounts, trading, staking, and other digital asset capabilities. The crypto businesses scale your digital asset business and engage in tokenization without compromising security, compliance, and operational efficiencies. And these are the three keywords, and nobody wants to compromise this. No institutions wants to compromise security, compliance. You know that Ripple is trying its level best to be compliant, although SEC is behind its tail. But obviously, if it gets through that, it's going to be great. And third, operational efficiency. Obviously, this is awesome, folks. Look at this. SOC2 Type 2 compliant, ISO 2700001 compliant, FIPS 142 level 4 certified, EAL 5 plus common member, talking about the partnerships, the compliance, legality. This is what we're talking about. This is awesome, folks. Anyways, let's see. Look at this. Let's see what else do we have in Ripple's front. The future of finance is on chain with enterprise grade compliance features, a native DEX and AMM, accelerating RWA tokenization growth, and a global developer community. The XRPL is built for the next generation of institutional finance with fully open source technology. Awesome, folks. Anyways, we checked out Ripple's official handle, but for her Hbar, let's see what the community has to offer, folks. In real time, Hbar's price is almost 19.5 cents. It is down 1.41% in the last 24 hours. Let's see what the community is saying, folks. This is DaVinci Graph. Let me pause this for the moment. Cross-border and more. What's fueling the growth of crypto payments? Hedera Con. Let's see what DaVinci is saying. Huge news for Hbar. Swift, the global payments giant handling $150 trillion per year, is testing Hedera's technology with real banks in North America, Europe, and Asia in 2025. This isn't just a test. Real banks will process real payments using Hedera's technology, and now we're transcending the speculative phase. Now it is time for mass adoption, real world use case that we have been constantly talking about, and this is why this is massive. Hedera makes Swift payments instant from 2 to 4 days, under 60 seconds. I mean, this is awesome. Costs drop to just pennies instead of expensive fees. Swift isn't going away. It is upgrading with Hedera. This is basically the integration with the legacy systems that we have always talked about. So for more details, watch this beautiful lady, Elisa DiCaprio, head of industry engagement at Swift, discuss the future of cross-border payments at HederaCon 2025. Folks, let's see this video. This seems interesting for the Hedera coverage. I'm excited to see what this is all about. Let's find out, folks. Yeah.
Elisa.
Awesome. Hey, everybody. My name is Elisa DiCaprio. I work for Swift as head of industry engagement. And before that, I was chief economist at R3. So my remit at Swift is largely to work with central banks and to work with payment market infrastructures to increase the speed of payments, increase the transparency of payments, as well as building out digital public infrastructure.
Swift network is, world renowned for moving or messaging that enables money movement. Where are you seeing the key drivers for the shift to crypto payments?
I'm going to give you a very different answer.
Okay, cool.
So I think, from the perspective of cross-border wholesale payments, really where we see the drivers of stablecoins coming from is, first of all, just the existence of DeFi, right? So institutions, customers, clients, all of them see that it's possible to do instant payments, it's possible to do instant settlement. Why aren't we doing it in all of the different transactions that we have? So I would say that's very directly the first driver. And then the second driver, honestly, is really around the G20 goals. So the G20, which is only 19 countries, you're welcome, has a goal for 2027 that something like 75% of global payments are credited to the beneficiary's account in less than an hour. And so how do you do that with traditional payments? It's really challenging. So it's kind of straightforward. If you're doing this with digital assets, that works very well. If you're doing it with traditional payments, it's a little bit more difficult. So, one of the things that we find, for example, is that already 90% of payments are credited to the beneficiary bank in less than an hour, but then the actual account of the recipient, only 43% of those flows, 43% of the 90% are going into the beneficiary's account in less than an hour. And that's for reasons of batching, which you don't need to do with stablecoins. It's for a reason of closed payment systems. So maybe the payment went overseas, the system was closed at the time, so it's not going to get credited in an hour. And then different compliance features. So there's some jurisdictions, for example, where you need to pay the beneficiary before you actually credit the account. I'm sorry, you need to call the beneficiary before you actually credit the account. That's going to take you some time. So these are the two main drivers that we see from a wholesale cross-border payments perspective.
Cool, thank you. So once we've got these drivers in place and we all kind of agree that we're being kind of forced forward with this new technology, you then get this kind of inhibitor, which is enterprise adoption. Yeah, so we all know enterprise change moves glacially. So how do those two things come together? What do you see in terms of the ability for enterprise to adopt this new technology? And if I direct that to you, Elisa, first, because Swift has this, probably the most glacial of change processes for obvious reasons. Where are you as Swift adapting or augmenting to incorporate this new technology?
Well, I'm gonna say there's really two levels of this. So the first level is internal, and the second level is external. So internally, right, we have message fields, we have things like this that need to be adjusted. So for example, if you're doing a cross-border payment, there's a drop-down currency menu. It's an ISO menu, it's not a Swift menu, but it doesn't have stablecoins in it. Yeah. So that needs to be adjusted. The size of the fields needs to be adjusted. Right now, well, we're in the process of making changes like this, but the size of the field will fit a BIC number. It won't fit a wallet address. So, these are the kind of mechanical problems that we have to work through. So I think those are happening. Mm-hmm. And then the second level at which Swift works is with our with our banks, right? So Swift is just, we're the network, but really where the problems happen or where the changes happen is at the bank level. So a lot of what we're trying to do is make it easier for banks to then incorporate these new technologies and these new payment instruments. Yeah. So that's it's a combination of addressing the reasons for fragmentation, addressing the compliance issues. Compliance is hugely problematic for these banks because, of course, if you're using traditional rails, right, you have a certain way of doing compliance. If you're using stablecoins, you need to collect a different kind of data set. You need to know the person's mobile number. You need to know the place of residence. You need to know the place of birth. These are things that you don't collect in a normal bank transfer. So with compliance, that's a problem. We're trying to help our different banks deal with that. So I think it's really around these two levels. It's both internal, which is fairly straightforward because we're a company, you can change those things. And then it's external, which is how do you change all of the different nodes in your network and make it easier and less costly for them. As an example, right, there's 120 plus, somebody in this room knows this correct number, different wallet providers. If you're a bank, do you think you're going to integrate with 120 different wallet providers? Of course not. That is hugely expensive. But if we can provide a way that they can integrate maybe with an aggregator or some other way, then that would make it cheaper for them and make it more straightforward for the entire industry. So this is really where we're looking. We've done a lot of POCs, kind of live trials, to understand where the different pressure points are and where the frictions are and how they can be addressed.
Yeah. So in 2025, you've got a lot of live trials coming up, because we were talking
Absolutely.
to your team just last week, and some amazing stuff coming up. I'd like to switch tack now to talk about interoperability and standards. From my perspective, I think these are problems that need solving in order that we can really truly scale and embrace the potential for programmable digital money. So in turn, I think each of you speak to interoperability and standards, starting with you, Elisa.
Sure, I love interoperability and standards. What more would you like to know? I'm kidding.
Where do we need, to be a bit more pointy about it, what do we need to start with right now that will make the biggest change, and where's the low-hanging fruit?
Okay, so I think that's a good way to think about it. I think in standards, a lot of what I was talking about earlier is already well in motion, right? So for example, what kind of data are you collecting? What do you need? How are you doing compliance? How are regulators doing this? This is all in progress. I think the question of interoperability is a little bit more tricky, right? Because what we're seeing with stablecoins is this explosion of new types of financial instruments, which is fantastic, but it also increases complexity enormously. Yeah. And so how do you simplify that so you make sure that there's still a stable flow, right? And you make sure that everybody can access this, because right now that is definitely not the case, right? You certainly have different sectors that are using it heavily and some sectors that are not using it at all, but that should be using it. So I think in terms of, we've focused a lot on financial fragmentation and how to reduce that. And it's not just a story about one company doing it. It has to be a collaborative effort. One of the things that we're doing is working very heavily on digital public infrastructure. And this is interesting because this is the idea that you have institutions and you have governments which traditionally have not built payment rails, right? Payment rails are often built by the private sector and sort of backed up by the public sector. And now we see the public sector saying, oh, there's all these things going on. We actually have to be involved in this. And you see this movement of national payment systems, of different regulations about AI and DLT and stablecoins. And so how are all these things coming together? And so we're really working to collaborate with different institutions and different governance now on the public side to see how that can reduce some of the problems with interoperability that we have from this hugely fragmented sector.
Great, thank you.
So folks, what do you guys think about these connections and this transition to mass adoption, the transition towards mass adoption, because we're going from the theoretical phase to the practical phase, providing real-world use case, providing real-world utility. And do you really believe that projects like Ripple and Hedera can take finance to the next level? And is the future of finance truly on chain? I would really like your opinions, folks. Do hit the comment box below and let the community know. Anyways, guys, this was it for the video. If you liked it, make sure to like, share, comment, subscribe, and hit the notification icon if you're interested in utility coins and potential gems. And you can also support the channel by becoming a Patreon, so do check that out. Like I always say in the end, until next time, stay blessed and stay tuned. Thank you very much, everyone.